Wanted to take a look at the stock market today, specifically SPY stock today, which hit an assets under management AUM of over $500 billion. This despite a bunch of outflows. But what's happening with SPY stock today, the stock market today, and also what's going to happen in the next couple days? We've got three key economic indicators coming out. Nothing too heavy on earnings release. Of course, NVIDIA was one of the ones that really pushed everything just previously. But what's going to happen with the three indicators? We've got consumer confidence coming out Tuesday. I think Wednesday is GDP. The second look, you get three looks, then it continues to be revised thereafter. Then finally, the big day, Thursday. What's going to happen with personal incomes, personal expenditures, most importantly, personal consumption expenditures deflator, or the PCE index, which is the inflation index inside personal consumptions. This is the one the Federal Reserve watches. We've got a preview from CPI that came in, and PPI a little bit earlier in the month. Shouldn't see any big surprises here. Some of the feedback we're getting from the Federal Reserve Board members, whether they be governors or presidents, are saying that they want to see inflation clearly on its path towards 2%. I don't see it at all. JP Morgan Wealth came out the other day and saying that they believe it's going to be a low, slow grind down to 2%, something I've been saying for months now. Let's jump in. I want to show you a couple of charts I'm looking at, preparing you for the week ahead for the stock market today. Here are some key headlines for the stock market today. The bottom one, of course, really caught my eye. $500 billion for the S&P 500 SPY stock, which is the largest ETF there is out there. And I think this was a huge milestone for them. The next closest is about 20% lower. They only have about $400 billion. On assets under management for that next closest ETF. That's how big S&P 500 ETF SPY stock actually is. And I did read an article, this particular article off of Zacks. They were talking about how they saw already in the previous 2 months about 25 billion in outflows. That a lot of that 500 billion is merely capitalization from the current existing stocks. Moving forward, this is one of the things that, here's the actual S&P 500, the top 5 S&P 500 holdings, and looking at the percentage. These top 5 represent about 20, if you add that up, that's 24% of the entire S&P 500 ETF component. I'm not a big fan of that. I put together, and I'll show you this in just a second, but I put together a listing of what one share each would be valued at for all 500 of the components within the S&P 500. The S&P 500 ETF, the SPY stock itself, has, I think, 503 actual stocks. But here are the so-called Magnificent Seven. These are the closes from Friday. We have a pretty flat market. SPY stock today, right now, it's about noonish, mid-morning, if you will. Flat as a board. Not really anything going on. We're waiting on economic data for that next catalyst event. But if you look at each of these Magnificent Seven stocks, you can see the price, the next 4 quarters earnings per share on average. I take a look at a bunch of different analyst expectations, add them up, divide them, figure out what the average is. You can see the yield off to the side there. Alphabet and Meta, Google stock and Meta stock, still lots of yield there. Now keep in mind the U.S. 10-year Treasury yield bouncing right between 4.25 and 4.35% right now on the benchmark U.S. Treasury yield. Here's an important kind of look at that. 40%, about, I think it's $150 billion, 40% of Warren Buffett's investments right now are in the bond market, which include, of course, the U.S. 10-year Treasury yield. 40%, $150 billion. Why? Because take a look at these yields. Then go backwards at the, mentally, the top 5 stocks, not quite 7%, of course, but the weighting within each of those stocks is so heavy that if we get a big move in any of these 7 stocks here, you'll see a big shift. Some of these stocks are yielding less than the US 10-year Treasury yield. The 10-year is your benchmark. You sit there as a value investor, you ask the question, if I invested in the United States right now, what am I going to get? Okay, 4.25%. You only have one stock, Alphabet, Google, which their future earnings per share would yield higher than that. Now, there's a big difference between when Google, from an earnings per share versus today's stock price, what they do with their money versus you actually investing in, say, the United States Treasury. You get income via yield. Google would take that, Alphabet company would take that yield that they're earning, their earnings per share. They don't necessarily return 100% of that to an investor. No company does. Some companies will provide dividends, but then the rest they reinvest. And that's why yield is such an important thing, because they have the capability of reinvesting and creating more shareholder value versus simply returning it to the individual investor. And of course, Meta Platforms just announcing that they are their first dividend, which tells me they don't have the ability to invest further and get gains further. It's better for them to return money to investors. They're sitting on a stack of cash. They can't really do anything with it. Might as well give it back to the shareholders. Here's a look at SPY stock today, QQQ stock today, of course, the top 2. The 11 sectors underneath are the ETFs that the Spider ETF, State Street, of course, puts together this. That Spider, State Street Spider Select ETF SPY stock is the S&P 500. The 11 individual sectors is down below. This is one share representing each. I do things differently than what you actually see on the what the ETF actually does. I use the actual stocks, but I only put one share in. The reason why is simply this: I don't like the weighting. Again, we go back to 5 stocks, 24% for SPY stock. If SPY stock today were all of a sudden to sell off because of those 5 stocks alone, that basically would drag down so much of the SPY stock itself. That's why I'm not a big fan of the weighting. I get it, but what I try to do is just represent what's going on with just individual stocks. And as you can see, there's a lot of room here, but I wanted to show you a different kind of chart here. Here's SPY stock today. This is overall all the way over on the left-hand side. You can see what's going on since its low in late October. We've had a huge rally. This is SPY stock moving from basically 410 to 510, about 100 points, which is 25% roughly, that move from the 410 low. The 11 sectors, let's take a look at these. Here are the 11 sectors, and towards the top there you can actually still see the SPY stock itself. There are only 4 sectors that have outperformed SPY stock itself. So although I showed you those yields, doesn't necessarily mean that these are going to go a little higher. Let's push advance a little further. XLE way at the bottom there, barely any movements. You can see the pink there. What is that? XLU, kind of working your way up. You can see the percentages, but I'll focus in a little bit so you can get a better look. Those are your percentage gains since the low in October. XLC, the telecommunications sector, which is heavily weighted with just a couple stocks that have soared, moving up 25%. XLK, financial technology stocks, 28%. XLF, the financial stocks, 27%, and then downwards. XLI, 24% increase. That was pretty impressive. But you see how each sector can moves the way it's going to move. There's still a lot of yield on some of those. Some of these stocks have a lot of yield, but the stock prices won't move much at all. US 10-year Treasury, like I've been saying, probably going to be bouncing around here until we get a clear picture of what's happening with the economy. Are we actually going to get to 2%, or is the Federal Reserve going to have to move higher? My belief, I do not see a clear pathward downward to 2%. I think it's going to be a long, slow grind. So does JP Morgan Wealth. These are your big kind of indicators we're looking for. Core PCE inflation deflator, as you can see, is moving much lower. However, sub 3% on core PCE inflation, not quite at 2%. If you overlay these two charts, personal expenditures versus core PCE inflation, you can see that there's a little bit of a correlation there, a lot of correlation there. It's certainly not a perfect one for one. Expenditures is moving back upward. And this is key, that if expenditures continue to move upward, inflation could move upward as well. But there's a lot of variables at play right now. China's economy is really kind of grinding lower. Think about oil for a second. Oil prices. OPEC has been cutting and cutting and cutting. They're desperate to push the price of oil up to what Russia needs in order to gain some money coming in so they can fight their war. Of course, the rest of the world would like to see just the opposite. So OPEC has been slashing oil prices or oil production, yet prices really kind of moving lower, basically down to about $72. Russia needs the price of oil around 110. What's going on there? China. So although personal expenditures is going to move higher, this isn't necessarily going to push inflation upward per se. 70% of the big spike we saw in inflation, of course, was housing. The rest of it may get a pass on inflation increases simply because China is sputtering out to near zero, and that could have devastating effects on the overall picture for what's going on with inflation. As China, their demand overall decreases because of the real estate bubble, which is making our 2008 look kind of silly, actually. They're not going to be, they don't get domestic demand like we do. And all the domestic demand that they had up until this point was basically smoke and mirrors. They overproduced real estate, which spilled over into the overall economy. Well, that's kind of gone now. So what happens next? Well, it could mellow out our inflation on some level, but you really need to pay attention to the mortgage rates. Will they start moving higher, which will keep prices lower for housing, which would contain inflation overall? So this is a big picture to be kind of looking into, but you can't look at just one variable. You need to encompass the whole picture. Nonetheless, I wanted to get a good look at the stock market today, SPY stock today specifically because of its clearing the 500 billion level. Make sure to hit that like and follow button if this is the kind of content you're looking for. We'll see you in the next video.